The opening range breakout strategy work for crypto, more specifically for Bitcoin, and this is the question we're going to answer today. I have 30 days of back data that I'm going to be sharing with you guys, as well as some hypotheticals that are very encouraging at the very end with a bunch of pie charts and explanations. So stick around to the end as I go over this strategy with you guys today. So I'm going to use the Asia session for this specific example. If you want to check out the New York session, you can check that out. I will leave a link below. But for this specific example, for those of you guys that can't make the morning session, let's try and see if this works for the 4 o'clock p.m. Pacific Standard Time Asia session, or 19 UTC. The first thing you want to do on this strategy is you want to block out the first 5-minute candle at that specific opening time, which is 19 UTC or 4 p.m. Pacific Standard Time. So first find that candle wherever it is. So 1900 is down here if you guys just want to use universal time, which is this candle right here. So once you block that out like so, now you have your opening range, right? That's what they mean by the opening range breakout, right? So this opening range has to do with that first 5-minute candle. Some people use the first 15 minutes, some people will use the first 30. I don't know anything about those. I haven't back tested those. The 5-minute is the one that I tested for these 30 days. But first, for those of you guys that don't understand what I'm talking about, this is how the strategy goes. You're gonna block out that first 5-minute candle, and then you want to manage a trade on the 1 minute. Okay, so as soon as you block that out and the next candle prints, then you're ready to move down to the 1 minute to manage the trade. Now, what you are looking for in this specific strategy is you're looking for a break to the upside or a break to the downside. And that's more likely going to tell you which direction price is going to head for this particular session, which is the Asia session. As you can see, price blew out the bottom, right? Really quickly, so much so, it literally gapped on the 1 minute time frame. And so you can see the intention of the market is pushing down. So what you're gonna do is you're gonna put your stop loss on the opposite side of where you enter. But more specifically, what you're looking for an entry is you're looking for it to hit the border. You want it to exit the area that it's going to break. So in this case, it broke to the downside, so we're looking for shorts, and then you're looking for a retest. So this is not probably the best move right here because it came inside of the zone, but it broke again, and then it came back and retested multiple times on this specific example before it ultimately did its big move. So as long as your stop loss is on the other side of the range, you should be safe most of the time. You should also know that the first move sometimes is a fake out before it heads the other direction. I'll show you that in another example, but for most of you guys watching this video, you're probably looking for the back test, and you probably already understand this strategy. And if you don't, you want more details, go check out my Telegram. This is all I talk about for the most part, is this entry model, and I'm using it with crypto, and to my knowledge, I'm one of the first talking about this. So if you guys want to learn more about this, I'm going to be talking a lot more on this YouTube channel about it. So follow me here if you're interested in absorbing this kind of strategy and this kind of content. Outside of that, you're going to have to know how to manage this trade. And so obviously you're going to put your stop loss on one end and your entry is going to be on the opposite end. So this range here is your stop loss range. Okay, so this is what you're going to use to judge how many multiples you're going to bet on going downward. So I'll explain that a little bit more in detail. So you're gonna grab one of these positions. Since we're going down, we're going short, long is up, and you're gonna click on the line where you enter. So we always enter on the line where it broke. Now you're gonna use this tool to measure, and you can see right here the measurement. Okay, so it's 2-to-1 ratio right now. So if it says 2 here, that's a 2-to-1 ratio based on the amount you would lose if it went this direction. So let's just say this is $100. If it goes backwards on you, you lose $100. If it goes the right direction that you're betting, in this case we're betting short, then we're going to measure how many multiples using this tool that you would have gained if you would have gone short, right? So in this case, man, this is a big old move, right? So you got, and this session runs all the way until the London session starts, which is about 3 a.m. Pacific Standard Time. So that's a big range of time, and I believe that this is the distance that it traveled. And so for this move specifically, right off the ORB strategy, you got about 19 multiples of this. So this would have been about a $2,000 move based on this multiple being 100. So you would have risked 100 to make $1,900 on this specific example. So now, does it make this big of a move all the time? No, it does not. What is the main range to hold, right? Is it 3 times your stop loss limit? Is it 4 times? Is it 5? What is it? And that's the important metric that we got to look for. And that's a hypothetical that I did run, and I have the best risk to reward for this specific trade, for the specific strategy. And so I'll share that with you guys at the end. Now that you understand how this strategy works, let's look at what I found and how the Asia session did with this specific strategy for the month of March. Now, just so you know, these are the metrics that I did track for this specific experiment. Effectiveness, did it work? Yes or no? Risk to reward, how many multiples of our stop loss did we get? How did it retest? Like, how did it bounce off of the trend line, right? So when I say bounce off of the trend line, I mean, did it come all the way back and bounce off of the trend line? Where's there a fair value gap involved, right? There's a fair value gap right there, plus it touched the trend line. So there's multiple ways to enter this specific strategy, but mostly you're looking for a trend line retest, but sometimes it'll only come back into this fair value gap before it continues down. Sometimes it doesn't retest at all, guys. Sometimes it just goes straight down. And so you got to realize that those are all the different ways that this specific strategy entry can work, but which one works best? And that's also something I was trying to track, as well as was there any manipulations before the big move? Like, did price leave, go on the opposite side, fake you out, and then come down? Was my stop loss hit? And also, was there a round trip? Meaning, did price, after it left here, did it come all the way back to make a full round trip after it already did that 19 or 20x multiple, right? Does it come back? And in this case, it doesn't. Often it does though. So I also tracked that metric as well. So let me show you some of the data that I did find. So here we go. So how effective was this strategy during the Asia session using Bitcoin as the asset to trade for that 30 days? So 70% of the time it did work, 30% of the time it did not. Okay, so you have to keep these numbers in mind. It's not perfect. Sometimes it goes against you and it does not work, but majority of the time it does, and that's all that matters. Now, how big is the bounce? Let's go over that towards the end here. Let's see, stop loss, how often is its trigger? You'll see it's very closely correlated to this. I mean, both these pie charts, I might as well just combine into one as far as effectiveness, right? Because stop loss hit means it's ineffective, and you know, that's probably the same exact pie chart. That's why they look very similar. Manipulation before the big move, how often is there manipulation? About 63% of the time. So most of the time it's going to fake one way before it goes the correct way. Round trip, like I just mentioned and showed you guys, about half and half, right? So that's not a very great metric. It's a kind of a flip of a coin toss. So that's not the most reliable data. Does it come all the way back? How does it bounce, right? Which is the best bounce to rely on? Fair value gap plus the trend line, no retest, trend line only, fair value gap only. I don't know why I have two of them here, but I guess we got to combine those. And I think I must have misspelled something, so I think that's trend line. So ChatGPT kind of screwed me on that. Let's go 3.3 right here. You got to add it to here, so 23. So it looks like no retest is the biggest one. It just takes off for the Asia session about 75% of the time. It will come back to retest at fair value gap or trend line. So you have to realize that just because this looks like the biggest one, you got to combine all these as retests, okay? So outside of that, like how many multiples are we getting? And so we got 30% of the time it did not, right? It hit our stop loss. And we see that over here, right? It's almost reflected on that chart as well. And then if you look over here, you got 2 to 3 R 10% of the time, 1 to 2 R about 6% of the time, 3 to 4 about 13, 6%, 4 to 5. So it's pretty, I mean, as far as distribution goes, there's not one that really sticks out the most. So it's better to check the hypothetical that I did run to see which one's gonna make you the most money if you're to hold for a certain amount of time. So I did run that. So I got a little bit more granular with this pie chart. So let's look at that real quick. So let me explain the hypothetical I ran really quickly before I show you the actual numbers. And the hypothetical was basically that the range here, the stop loss range was negative 100 if it came back and hit my stop loss. But if I held, which risk to reward was best, or which happened most? Was it one risk to reward, which would be the exact same, right? Was it 1R that went out the most? Was it 2R before it came back and hit my stop loss? Was it 3R before it came back. It hit my stop loss. Was it 4R before? I did this all the way up to 10R. Which one's the best to hold? Because that's important to understand, or to at least have some data for, because otherwise you're kind of guessing as far as when to get out of the trade. There are other factors, I should say, but you know, I would like to know, just with data, what is the most advantageous amount of time to hold this specific trade for the Asia session using Bitcoin for the month of March. So let me show you some of those numbers and which one won out. So if we look at the data, we'll see that, you know, 1R won 21 times and then lost times. So $1,200 is what I would have made at a 70% win rate. If you go to 2R, you see it would have won 20 times and would have lost 10 times, or would have come back to hit my stop loss 10 times, 60% win rate, $3,000. But 3R seems to be the winner at 16 wins and 14 losses at 53%. So this proves that win rate doesn't mean shit. You would have won a total about $3,400. And then it just starts to kind of go down from there as far as risk, because you're going to win 10 times but lose 20. You're going to win on 6R 6 times, lose 22. 10R, you'll win 4 times, but you'll lose 26 times. So you will make some money, you know, on 10R. In this hypothetical, the 3R wins out in the P&L, which is all that really matters, right, guys? So either way, guys, if you are interested in learning this strategy more specifically, I have courses, I have mentorships, I have links below. Go check them out. And I also gonna be trading this live going forward. So I hope to see you guys on the next video. Follow me on my other socials, like, share, do all that fun stuff. I will see you guys on the next video. Take care.